Hey guys, how you doing? Good morning, good afternoon, good evening. Stanley here for my Stan Capital. Today I'm looking at this is another video from the archives. Anyways, if you're just coming to this channel, please give it a like and subscribe because my content are top notch. I deliver premium packages. That's what my videos are, premium packages. You can basically learn how to trade profitably just by watching my videos for free. That is something that's, you know. So anyways, let's take a look at a topic that I'm really interested in. And I feel that a lot of traders need this topic, right? Continuation trades. How do you spot continuation trades and what criteria, right? What criteria must be met before you attempt a continuation trade? Now, there'll be some stuff in between because I don't think I'm not any notes right here. I'm not saying it off the top of my head. You feel me? So you have to forgive me. But the first thing I need to do is what? And you need to mark out, you need to, the first thing we do is bias. So that's the first thing I do when I come into this to the to the screen. Bias, my higher time frame bias. Higher time frame bias, right? Now what does this mean? This basically means that how do I build my what's the direction, right? Just looking at this, what's the short-term direction? Just looking at the higher time frame structure, higher time frame price action. You feel me? Like, what can I expect in the next 2, 3 days? That's how I look at it. I'm not a long-term investor. I'm an intraday trader. You feel me? The maximum of my old trade is from a few hours or from a few hours to like maximum, 2 days, 3 days maximum. So yeah, I'm an intraday trader. So I like to build my higher time frame bias, and this starts from what? The daily time frame, weekly time frame, sometimes the monthly, sometimes the monthly. So I need more confirmation, more assurance on the trade. So that's the first thing I did. Second thing I need to do is what? I need to so how do I build the higher time frame bias from higher time frame structure, higher time frame structure, right? Higher time frame structure, higher time frame key levels, higher time frame key levels, right? Higher time frame. So yeah, higher time frame structure, higher time frame key levels. This is basically what I do. This is the first thing I do. And once I've been able to establish my higher time frame bias, the next thing I do is I basically go on to the lower time frame, right, to make sure that the higher time frame bias is in line with the lower time frame structure, right? So let's say I'm looking for a buy, I'm looking for buys now. If the higher time frame bias is always saying buy, right? And lower time frame is not in agreement with that, I do nothing. I absolutely do nothing. You feel me? I do nothing. So you guys know I trade structure, liquidity, and key levels. So these are the ways that I trade them. So we're going to look at a couple of examples. I'm going to show you the same thing on all of them. And mind you, these trades, right? They have been taken only for this week. I'm not showing you charts from last 2 months, just this week, and this is just Thursday. This is just Thursday. You understand? So let me just show you. Let's start with GPUSD. You start with GPUSD. So this is GPUSD, right? So we had Trump give some crazy speech. Yes, yesterday. Yesterday, and which made this move possible. But everything has already been established from the higher time frame, right? Everything has been established from the higher time frame. So the first thing that I basically did was go on to the weekly time frame to know that okay, market is already in a buy mode, right? We're expecting this level right here, and we're targeting possible this level right here. So from here to here, that is my range. So this market should keep buying until it gets to this area. That is 1.32, 1.3210. You feel me? So yeah, aside me. So yeah, that is the template. So let me just draw this back a little bit. to just show you get the way I built my bias, right? The way I built my bias. So let's go on to daily time from now. Let's start from Friday. So this Thursday, this Friday, last week Friday. So what can you notice here? I noticed basically that she got choice. We have this key level right here, this one right here, right? Now there's no assurance that this level would hold, but this is a last assurance key level. This is a last assurance for the bias to hold. And voila, what do you see? Market has come in there to this key level and reacted. Now, what I want to see, I mostly want to see a reaction from that key level, and if possible, an engulfment, a candlestick engulfment. Now, this is what we call an engulfment right here. This is daily time frame, by the way. So this is Wednesday's candle, and engulfed by what? Thursday's candle on the same key level right there. So this was a what? A clue. And you can see that Wednesday's low was swept by Thursday's low. Hope I'm going somewhere with you guys now. Today we're going to show you how to catch the best continuation trades. Now, once this has been established, next thing I established was my draw on liquidity, right? My external range liquidity. This is it right here. The next possible area market should go to. Where's the next liquidity, right? All these people they are selling, they were selling. Where do you think their stop losses are? Right here. So that is my draw on liquidity. So once this is open, once it does not be mitigated yet, right? I have the full permission to look for what continuation entries inside this range. You feel me? Inside this range. So what best thing I do is we're going to do my 4 time frame and I look for possible, and let me start from daily back. Let me go to back to daily. So the daily now, go to the line charts. You basically see these on the line chart. You see this level. You also see this level. These are 2 levels I've marked out, right? Good. So let's go to the 4 time frame. Now, in the 4 time frame, I can basically see that okay, this 4 time frame, that daily level has already been mitigated. It has already been what? Been mitigated, right? So it's no longer valid to me. So I'll just delete this level straight up. So this now looks like a what? Inducement. This looks like inducement what to this level right here. So that is now my first trade. That's not my first entry. Can you see the way I got my first entry? Now, that's my first entry. Now, how do I know that I don't know that this level is valid, right? Lower lows, lower highs, lower lows, lower highs, higher high right there. So let's look at Monday and play the candle a little bit. Now look at this. Look at this right here. Let me take it back. Let me take it back. Now look at this right here. Now market was making what? Market was making what? This is very, very important. This part is very, very important on the lower time frame. This is the 4 time frame, by the way. Lower lows, lower highs, lower lows, lower highs, lower lows, higher high. Can you see we've made higher high on the line chart right here? It's very, very important. This higher high is very, very important. Like final confirmation, right? To see that, okay, this price level would hold for me. You feel me? So yeah, this now becomes my key level. This now becomes my key level where I need price to come into. Right? This now becomes my entry. And where do I target? I target the external. So far, every time frame is pointing towards the buys, right? The overall order flow is saying buys, right? This now becomes my trade. This now becomes my trade on GPUSD. So let's play price forward. Let's play price forward a little bit right there. Now, this is Tuesday, this Monday. Market has come in to our level. We've reacted. Now, this is Tuesday. I'm coming. I'm trying to see something. Let's go out to the daily time frame now. Let's go to daily time. Let's see Tuesday's candle. Oh, I made a mistake. I made a mistake. I'm trying not to make this stuff very, very fast. Anyways, we got our reaction. Our reaction on the let me move this to the side. What our reaction on the trade on Tuesday? This reaction, I really love this reaction right here. I really love this reaction right here. So we can now go to the 4 hour time frame and start building buyers for what? For a re-entry, for a continuation trade, which is what I'm trying to show you guys now. So now let's go on to the 4 hour time frame. Okay. Okay. Now what can you see here? Let me take it back. Now what can you see here? Let me check up another broker. I'm coming. I do like this. I do like this broker. Let me check out. Let me check out where you're going. Just give me a minute, guys. Give me a minute. I'm trying to see something. Trying to see something. Okay. I'm trying to see something. I'm coming. All right. All right. Yes. Yes. Let's go back. So, as I was saying, right? So this is the 4 hour time frame. Let me take these candles back. This candles back. So market has coming to our level right here. Now this is your continuation. This is your first continuation entry, right? Let's say you didn't take this. I'm saying this that let's say you didn't take this buy right here, straight from the daily time from key level, right? Say from daily time from key level. Is this right? Let's say you didn't take this. You didn't take this buy right here, straight from daily time from key level. You wanted a confirmation. Your confirmation is what? It's the 4 hour what structure right here that got broken to the upside, right? And you enter from this key level right there directly. Now, let's say you miss this one again. Let's say you miss this one again. Let's say you miss this one again, right? The one of my confirmations I like to look at for is what I told you guys, the engulfment candle again from after a reaction, right? But this is what this is Tuesday London session candle engulfed by the New York session candle 4 hour time frame, sweeping the low right there, right? Go to the line chart. What do you see on the line chart? I can see this key level right here on the 4 hour time frame. That becomes my level of interest again to look for buy continuation. Buy continuation. Now look at this right here. This is your words. Inducement again. Always trade with inducement present. Always trade with inducement present. Always. It's a rule. It's a law. Right? Liquidity must be present. Market must take out liquidity. So market takes out this liquidity. Coming. This other liquidity. This is your second buy. Right? You can put your stop loss around here, just below this low right there. And you're targeting where again? Targeting the external. These are two trades, separate two trades. The first trade is a 5 hour trade, right? The first one is a 5 hour trade, right? The second one is a what? A 4.9. And you can let price do its thing. Let price do its thing. And you can see all TP has been smashed. All TP has been. Now there's another one again. I don't want to go into that one too much. Let's just go to, let's observe it again. This is a key level, right? Got violated by one candle. And if you look closely, you see the same thing I talked about on the previous video. You see the link to watch that video right here. Once I have a key level and I've gotten a reaction from that key level previously, and then an engulfment, this is an engulfment or slash a breakout on that key level, this becomes a key level of high probability. So what do? You go to the 2 hour time frame to look for to ask yourself, the market creates liquidity? Yes, it did. Let me just put it to the side. I'm just showing you possible the way to catch reverse continuations, provided this area, this one, your external range liquidity is still valid. Provided your draw on liquidity is still valid. I'm earning on this. Once the market has gone on straight up and taken out this, I'm no longer interested in what? In continuation entries, because they're now low probability. They are now what? I repeat, they are now low probability. Now looking at this right here. You can see market has come into this key level now. This is 2 hour time frame, right? This now becomes your key level interest, right? It becomes a key level of interest. You can see market has already reacted from the key level before. Market has broke out with one candle. This is a one candle breakout. This becomes your inducement. This now becomes your trade to continue the buys. To continue the buys. Where's your stop loss? This O candle is your stop loss. This O candle right here is your stop loss. As simple as that, guys. As simple as I'm not warning you. And you target you again, you target the external. Right? This is now what? A 6.5 hour trade. Now combine this just for this week alone. Thursday, okay, from last week, right? Wednesday, this week's Tuesday, and this week, Wednesday. So 3 days, 3 trades, 5 hour, 5.5, 5 hour, and 6.5. That's crazy. It's crazy. It's like 5.5 plus 5, that is like 10.5. 10.5 plus 6.5, that is like 17 hour. 17 hour, just give USD. And I'm going to do more breakdown again. So let's look at EURUSD next. Let's pick out random ones. EURUSD is one of the best. One of the best. So let's go on to the weekly a little bit. Now, this one did not react from any key level, to be honest, on the daily, but on the weekly, it did. So this is the first thing I noticed on the EURUSD. We already broke out to the upside. We're massively buying, right? Obviously, massively buying. Now we've um we've broken out from this key level. This one right here, broke out from this key level. Market created what? Inducement liquidity. Can you see the candles right there? You guys need to understand liquidity properly. This is your inducement liquidity right here. Coming. Can you see that? That's your inducement liquidity right there. Straight, and this is your weekly key level. This is the weekly time frame. Right? So you can see market now finally came into the weekly key level. Good reaction. Perfect reaction, guys. Perfect reaction. This is what I want to see. This is what I want to see. So what do we do next? We go to the daily time frame to start building what possible buyers. Let me go out to the weekly now. I'm just mark like this. Perfect. Can you see that? Perfect. So go straight to the daily time frame now to start building buyers for our buys now. So the first thing I want to see, right? I want to see. I told you guys I want to see my reaction. See an engulfment candle. So you can see this is the first. This is the first. This is the first clue, right? This is the first clue. We got our engulfment right there. So what's the next level? What I'm looking at? This one right here. The open close right here. So this is Friday. This is Friday's candle here. Thursday engulfed properly, right? So the next thing we're going to look at here is how we're going to build our bias. So now you can see market has come into this level now and reacted again, giving us a good reaction. So my next level again is looking at this one right, this open close again. So I want to build my next bias. using this level. Now I didn't make any profit from this trade. I only made a profit from the GPUSD, right? Because I took this buy, but I got stopped at a break even. I'll show you guys why. I sent this one publicly too, and to the private people. So as you can see, market has broken out again. What can you see? What can you see? This is my liquidity present again, right? I was very confident on this buy, and you can see the daily level that I marked out, right? It also what? It's also the same level as the 4-hour level. You check the 4-hour time frame right here. And on the 4-hour time, what can you see on the 4-hour time frame? I can basically see market making what? Lower lows, lower high, lower lows, lower high, lower lows, lower high, and then we made high right here. Right, we made high right here. Right, we now make high right here. So that was my second or third clue. I don't know. I'm not keeping count again. Plus, there's kind of a trend line break to support my claims. So I was very, very bullish on EURUSD this week. Very, very bullish on EURUSD this week. So my first entry was here. So I put my stop loss below here. I think below this candle right here, around 83. Yes, 83. And I was targeting the external. All right, this is an 8-hour setup. So the first thing that the market did was come into my level. It created another inducement properly, created another inducement, and it gave me a proper shift to the upside. So you can see, market made what? A proper created a proper AI. So I was very, very bullish on this again. Like I was very, very bullish on EURUSD. So the next thing I did was, can you see this? Can you see this? It's a 4-hour. It triggered my level. Right, came very close to my stop loss. I was very happy that, okay, good reaction, good reaction. Let's start looking for what? Momentum. So market push, this was Monday, this was Tuesday. Look at Tuesday, I'm coming. So on Tuesday, it pushed up very well, right? It started pushing up very well on Tuesday. So as soon as markets started to come back to my, yeah, it came back to my level to touch again. I was like, guys, get out of this trade. I was no longer confident on the buy again. So the next 4 I can do basically came down. Yeah. So I left the trade. On EURUSD. I left it on EURUSD. So the next thing that happened was this was Tuesday's low. So let's go to daily time frame. I'm coming. Let's go to daily time frame. So on the daily time frame, so this Monday, this Tuesday, there was no confirmation on the what on Monday and Tuesday. There was none. I was just watching the chart like this properly. So look at what Wednesday did. Just look at what Wednesday did. Is slow. Okay. Just need to slow. So this was what Wednesday did. Wednesday just popped up to the upside, confirming that our buys were right all along, right? So let's assume now you missed Wednesday's pump from that same level, right? From this same level. Let's say you missed Wednesday's pump from that same level. What can you do? It's the same thing over and over again. The same thing over and over again. You mark out your key level, this one right here. This is your key level right here. You mark it out again, right? And you build your bias again. You go to the 4-hour time frame. Right, you go to the 4-hour time frame. Come now. You go to the 4-hour time frame and you start to build your bias. So from this, what levels can I mark out on the 4-hour time frame? I will basically mark out this level. So you can use the same stuff again. Lower lows, lower highs, lower lows, lower high, higher high. Right? Now market has shifted to the upside properly. So this is the first level I'm looking at, the 4-hour level, right? So you can go to the 2-hour level now, 2-hour time frame now, to mark out another level. Let's see what level is closest to the inducement. What level is closest to the inducement? This one right here. And the same thing I spoke about before prior. When you have a key level, and the market has already has already reacted from that key level, rejection, multiple rejection from that key level, and the market breaks out to the upside. This key level, if market provides good engineered, good liquidity, that key level is of high probability to me, right? So using the 2-hour time frame logic, you can see many rejections we have already. Rejection 1, rejection 2, breakout to the upside. Perfect key level. So what will be your entry size range? This whole candle right here. That would be your entry size range. And you just place your entry. It becomes your inducement. You place your entry here. Stop loss below this candle, this one right here. And you're good to go. Where would you targeting again? I think this is the best trade of the week. This is like the best trade of the week. And the whole momentum came on Wednesday last Thursday, right? Wednesday last Thursday. The whole momentum came Wednesday last Thursday. So let's see. So that's your inducement. This becomes your inducement. Very sweet stuff. Very, very sweet stuff. And mind you, our draw on liquidity has never been taken out. Right? Never been taken out. So everything's valid. Everything's valid. So what do you see? The next candle, tap, reject, bye-bye, straight to TP. So these are enter continuation trades. These are enter continuation. Now all these ones are happening after. Do not concern me at all. It does not concern me at all. Now market has taken out the external. And we are good to go. Right, we are good to go. Straight up, we are good to go. That is for Euro USD. Now, I've done USD, I've done USD. I think we left Euro AUD. Left Euro AUD. So let's do Euro AUD next. So Euro AUD, same stuff on weekly time frame again. So daily time frame. Yes, daily time frame. So what can you see on the daily time frame? I can basically see this on the daily time frame. Yeah, this is 20. So this last week Tuesday, 25th of March, right? So it played. If you go to the line chart, you basically see market making what? Lower lows, lower highs, lower lows, lower high, lower lows, lower high, possibly. So until the market switch to the upside, before I'm interested in anything, buys. Do you understand? If I'm interested in anything buys. That's basically how I operate. That's basically how I operate. You feel me? All right, that's an engulfment candle, which is nice, but not yet in the after the waters yet. Okay, this is good. Good. Now, this shows that market is making what? Lower lows, lower highs, lower lows, lower highs, lower lows, higher high right here. This shows what? A displacement of market structure. Clean, clean price delivery. So now we can now start building buyers now. Right. So what can you see right here? And just mark out this key level right here. And this is a very good QMR level right here that I marked out. But if you look closely, you see that it has already been almost been mitigated here, almost. So market did not basically use this one, right? Market basically did not use this one. It used this one, same out of level. This one again. This is what market basically used. This is a bearish open close. Market used it, engulfed it right there. Came back to that bearish open close. I used that for buys. So now there are now two levels now that market could probably come into, right? Probably come into, and used as what? Buy continuation to the upside. Right? The first level is what? Is this one. Sorry. Is this one. And the second level is what? Is this one. I'm a little bit dehydrated now. But let's continue. So these are the two levels that I'm looking at right now for buy entries. You feel me? So let's go to the 4 hour time frame now. Let's see what the market has right there. Market has right there. Okay. Now let's go to the 4 hour time frame. So on the 4 hour time frame, what can you see on the 4 hour time frame? I can basically see the same pattern again. The same pattern I've been using on the hour time frame, right? Right, same pattern right there, showing face again on the 4 hour time frame, right? So basically, I mark this level out as my buy entry, becomes my buy entry. There's an imbalance right there, and this becomes my stop loss. The before and after on my channel, you can see how I basically took these buys, right? Euro AUD. Now I did not target this. I know this is not like my own target because I'm not unrealistic. 10 hours more unrealistic. But if you want to target 10 hours, make sure you study, you practice a lot, and know when to target a 10 hour etc. Right? So yeah. Okay, dump came into our level right there. So this became my liquidity, right? The low of Tuesday. This is the low of Tuesday, basically. The low of Tuesday became my liquidity, and market just tapped into my level and reversed straight up. Now, if you notice something, now let me go back. I rushed this. I want to show you guys the continuation entries. Now, if you look closely now, what do you see now? This is basically what I want to show you about this trade. You see market was making what? Lower lows, lower highs, lower lows, lower highs, lower lows, higher high. So what can you do? You mark out this level. This is a 4 hour level right here. Break out. This market broke out of this level, only this level. So you can go to the 2 hour time frame, 1 hour time frame to see if market could create like an inducement for you, right? And it did, right? This becomes like your inducement to this trade. So if you had missed this one, and you're not comfortable with this one, with this entry right here, this is a chance for a re-entry. Stop loss will be the 4 hour level. Let me check the 4 hour level. I'm coming. Yeah, this is the 4 hour level. It's your stop loss right here. And you can basically target this eye right here. You can target this one right here. So this is like an 8 hour, 7.5 for rather. So let's go to the 1 hour, 2 hour time frame. Let's play it forward. Can you see that? Simple stuff. Simple stuff, TP smashed. So this is basically how you can use continuation entries. Using the line chart is very, very powerful, very powerful. Now you can see, now this one was low probability. In all fairness, this is a low probability entry because market could have basically come here. Yes, it could have basically come here, right? Tap into this level and bought from here. So if you're not sure of the one to use, this one, this entry right here, or this one right here, if you are not sure, you just wait. You delete this entry and wait. As market reacted from this one, right, and bruce structure to the upside, that becomes your entry. You go into the 1 hour time frame, 2 hour time frame. This is not what your inducement. There's your liquidity present, taps into your level, buy straight up to what? Your external range liquidity. There's your draw on liquidity, and that is it. There's no magic here. This is basically the way I trade. This is basically the way I trade. So the next one is next example of doing is Bitcoin. I took Bitcoin. Very clean buy. So let's go to the weekly time frame. Let me show you why I took Bitcoin. I'm not doing them. Okay. But my comes first. So basically, I knew that we're bearish. I basically knew that we're bearish on Bitcoin, to be honest. Bitcoin is very, very bearish, right? We've broken down all these levels and we're making like lower highs and lower lows, etc. So I just marked out this key level right here, this one right here. This one basically marked out. So let me just show you what I did. So going to the daily time frame now. So going to daily time frame, I also okay. Market was basically making what? Higher highs. Can you see it? Higher highs, higher lows, higher highs, higher lows, higher highs. We've not broken any structure to the downside yet to confirm that this structure is not bearish. We've not done that. So in the meantime, I will keep looking for what? Buys. So I go to the 4-hour time frame now. That same level, can you see that same level that I marked out on the weekly time frame? The same level I marked out on the weekly time frame, this level right here. That same line on the 4-hour time frame is what? It's the same pattern I will draw out for you guys previously. Where I made this. So this is basically the same pattern. So if you come here again, you see it again on the line chart. Clean. Can you see it? So drag it to this area. So basically the same pattern. This sweep, this inducement, this market needs to come back here and buy. So that was my entry. Right, that was my entry. Right, that was my entry. So basically I just can you see that? So I placed my buy entry around here. Triggered on Saturday, I believe. Right, triggered on Saturday. So I'll show you how to catch continuation entries. If you're not sure about this, that is basically what I want to like show you guys here. This was my entry. Let's play it forward to when it came into the level. Okay, it dumped to the level, give me a good reaction, dumped again, and almost my stop loss. Now this was my breakout. This was my breakout to the upside, and then we started to buy. So now at this point now, you will know that okay, number one, same thing again, the line charts, right? Market is making what? Lower lows, lower highs, lower lows, lower high, lower lows, lower high, lower lows, and then we made it what high right here. This was the first clue that okay, market is already it's time for look for what more re-entries. Look for what more re-entries. So basically, what do you see here? You mark out this key level again. Very, very simple, guys. Very, very simple. You don't need to complicate things at all. These are things I should teach my private infants, but there's no need to add. That's not the right, not the right pronunciation. There's no need to gatekeep knowledge. That's what I'm. So yeah, this becomes my area of area to look for buy entries basically, right? So yeah, let's see. I think this was the first re-entry that I did. I think it was the first re-entry that I did. I'm coming. Like the first re-entry that I did, and yeah, let me just play forward. Trying to check something. Yeah, just below this candle right here. Just below this candle right here. Yeah. So basically, um, you have this key level. So this candle's range will be like your entry parameter, basically. Entry parameter. It's like a 4 hour, just like this 4 hour. So yeah, so this comes like I told you, liquidity is very, very important. No liquidity, no trade. No liquidity, no trade. You don't need to force it at all. You don't need to force it up. That's setups. no liquidity, no trade. So let's see. Just play it off. Okay, it's very good. It's very good. Let's see if we can get another re-entry again. Let's see if we can get another re-entry going. Now, this is one reason why I cannot re-entry again. One of the reasons why I actually like did this because I actually looked at this key level again. So market could come into this key level again, to tap it out. So there was no need to use the low of this main one. So yeah, I hope you guys are learning something. Sure, that's the main thing. That's the main thing. So there's no need to just say that okay, this will be your entry scan will be your entry parameter because there's something here and it's all mitigated. You feel me? So yeah, that's all about Bitcoin. Just if you had missed this one, you're not comfortable. So you can see the way the market was struggling with stop loss here, struggling seriously with stop loss here. So if you have somebody that is not really that not like this low probability setup, because it's a low probability setup, to be honest, you want the market to be in your favor most of the time, then continuation entries should be your best friend. It should be your best friend, right? It should be your best friend. Because the market has gone straight to the listing, the external again, and dump straight up. It should be your best friend. I hope you guys enjoyed this session. It's great. Hope you guys enjoyed this session. Anyways, if you enjoy this video, give us a like, subscribe, share this video. Everything that you know, share this. It's very important. Share this video, guys. Share this video. It's very, very important. Right? Share this video. It's very important. And keep supporting this thing. And if you guys want to see me drop setups, I drop setups. We host live sessions, right? 2 to 3 times a week for free, where I teach my stuff. You understand? I drop signals. I explain why I'm taking such trades. You feel me? So yeah, if you really want to be part of that community, check the link in the description of this video. Just check the description of this video. You see the link right there. Join us on Telegram. We're almost at 500 members right now. So yeah, let's increase the number. So peace. I will see you guys in the next video.